In this video, I will show you what is a lot size calculator for the dollar index. I will leave the link below in the description, so you can also check the article that explains a little bit more details about this lot size calculator, and you will see also an example how to calculate this lot size based on the number of pips for the stop loss and also based on the percentage for the risk. Now let me show you all the details and also the fields for the lot size calculator so you can see how to use it, and I will show you an example with the trading platform. First field is the instrument. It is DXY, it is a dollar index, where you have also a possibility to change that to any other, but in this case I will leave this one. Then you have here a deposit currency. It is a field where you define which currency you would like to get the result. I have a trading Inside the trading platform, I have a trading account with the US dollar, so I will leave this one here, but also you can change this with a drop-down menu to any other currency. Then you have here two fields. First one is open price and the second one is close price for the stop loss. You can also put these price values here, but there is a second opportunity, chance, and also a way how to calculate this one, and that is to switch to the stop loss in pips. And that means when you click this one, you get here a field where you enter the number of pips for the stop loss. I will take this one and I will put this one here for as a 100 pips for the stop loss. Then you have here account balance, and that means which amount of money you would like to have in calculation, because you will calculate the risk. Then I will have $10,000 because I have a trading platform with a trading account close to $10,000. Then here it is, DXY 1 pip size, which tells you that the 1 pip is on the second decimal point, and that means when you go to the trading platform, here you can see that the price is 104.003. Now you can see that we have 3 decimal points, so the third decimal point is the pipette, and the second decimal point is the pip. So when the price changes, like now from 0 to 9, it means it has changed by 1 pip on the second decimal point, the second decimal place. Then you have here a field where you define the risk. The risk can be the percentage or the amount in the US dollar based on the account balance, and that means 1% of $10,000 will be $100. And then when you are ready with all these fields, click calculate, and you get the result that 1% of the risk is $100, and then it has question mark which you need to click because it asks you to enter the contract size for one lot for this instrument. And that means that you need to know what is the contract size with your broker for this instrument. So is it one lot equal to 1 unit or any other value? First way how you can know that, you can ask your broker for the specification sheet for this instrument and then see what is one lot size equal to number of units. Or the second way is go here to the trading platform, click market watch and click right mouse button here where this symbol is, click specification, and inside the new window, which is a contract specification, you can see the contract size is equal to 100. So you put this number here, and that means that one lot for the DXY dollar index is equal to 100 units, and this is very important to make the calculation. Click calculate, and you get that you need to enter one lot to get 1% of the risk for the 100 pips on the market. Below that you have more details about this symbol. For example, the minimum volume is 1 and the maximum volume is 250 with step 1. Okay, now let's go to the trading platform and let's try this trading example on the trading platform. For example, let's put 1 here because it says you need to enter lot size or the volume or position size is equal to 1. I will open pending order. I will leave it by a limit. That means I need to open the trade that is below the current market price. Let's open at 103.50. 10.50, and I need to put stop loss, and I will also put take profit. A stop loss should be 100 pips away, and that means below 103.50, and 100 pips is when we go here, change this one to that means it will be 103. Just a minute, it will be 100 pips. It will be 102.50. That means 100 pips from the market price 103.50, and we have here 104.50. that will be a take profit. Click place, and here it is. Now I have opened an order with a one lot because it says I should open a trade with a one lot and 100 pips. That will be $100 as a stop loss. Now let's go here to the stop loss, check it here, and you can see that the profit is minus $100. It is the same as the calculator has calculated for us, and it has defined how much the lot size should be based on the risk and also based on the number of pips. Now you can see also the take profit is similar. It has also 100 pips. It is take profit is set to $100. Now you can see and understand that when you use this lot size calculator for the dollar index, you can see that the calculator needs several details like account balance, stop loss in the pips, and also the risk and the contract size. It needs to define how much the lot should be entered into the trade, so you get the trade open with the risk management you have defined. If you have any questions regarding this lot size calculator, please leave a comment. I will try to answer a question as soon as possible. If you like the video, click the like button and subscribe. See you next time, and happy trading!